Hi guys, in this video we're going to talk about the counting of levels, how to choose the right pairs to trade, counting levels from the daily time frame down to the M15, long sustained moves and swing points, and also understanding the monthly, weekly and daily cycle. Alright guys, let's jump straight into it. Now before we get deep into level counting, we're going to talk about peak formations. I only trade two types of peak formations, and that's your M's and W's. Right, for the buy side, I look for W formations, and the first types of W formation that I look out for is when the second leg is lower than the first leg. This is a clear hit of the stops as we look to take our trades when stop losses are hit. And the second type of W formation that I look out for is when the second leg is actually higher than the first leg. In this case, the dealer does not move the market down below the first leg, right? As you can see, stays away from that first leg and moves away. So these are the areas that I actually look out to take trades from. And from the sell side, same thing, but just, turn over the other side. I look for informations, and the first type of information that I look out for is when the second leg is higher than the first. And this, as I said, is a clear hit of stop losses. So this is the point where we would love to enter the market, right? And the second type of information, in this case, this is actually wrong. I would look for an information where the second leg is lower than the first leg, right? So the dealer stays away from releasing the volume that is trapped right on the first leg, all right? So we would look to enter our trade on that second point. Now, the question that many people ask is, how would I know what type of peak formation to look out for? And that's very simple. We're going to look at the peaks and zones. And the first one, as I said, where we look to see the second leg being higher or lower than the first. In this example that we have right here, being an M formation, we want to see the second leg being higher on the first, right? So what basically happens here is, if we have the market moving down in a down phase and we have this structure or this supply structure, what will usually happen is, as the market is ebbing and flowing, such will happen where the market will play around this area without touching this supply zone right here, and then push into the zone, filling those orders and moving away. Essentially, that makes our second leg of this M formation. So this being our first leg, and then this move which went and took out the stops. Of course, this right here is a pull of stop losses, as retail traders or support and resistance traders use support and resistance strategies. Some people would think this is a flip zone. Sorry about that. Some people would think that's a flip zone, and people would be selling off that area with their stop losses just above that area. So this second leg then comes in as a move to hit all the stops and fill in these orders. So this is regarded as a peak formation. And the second type of peak formation would be where the market will actually push into the zone that we are talking about, right? Push away and fail to give us another move to the upside. In this case, the market would fail to give us a higher high. Right, the market would fail to go above that area and give us the second leg, which will fail to break that first leg, right? So this is also a peak formation, right? An M formation, and we can take our trades right at that point. Now, what would happen in such a scenario is, if we do have a market going down, in this case, this becomes our sell zone. All right, so we are essentially looking to sell at this area right here. What will happen is, as the market is pushing, all right, as the market is accumulating, market will push into the zone, right? So this comes in as our first leg, right? So already the orders have been filled at this area. And if that has happened, what will happen is, most of the times the market will fail to go above that first leg, and then the market continues going to the downside. So you being able to identify such gives you an edge as to counting your levels. All right, so let's jump into level counting. All right, so the question is, when do we actually start counting levels? I've just given you enlightenment on peak formations, and this is basically what we need to look out for before we start counting our levels. And in this case, as you can see, we've got the first leg being set, right, and the second leg being set, and that comes in as our peak formation, right? This is our peak formation high. So for the market maker cycle, what we look for after a peak formation has been set is a level of drop. So in this case, as you can see, we've got level 1 drop. This move has to be a long sustained run, right? Meaning we need to see a clear push into the market, right? A lot of people usually confuse a long sustained run with consolidation. So if you get something like this, whereby you have a peak formation and you get something like this, the market is not really giving you a long sustained run, right? The market is just consolidating, right? We do not consider this as a level count, right? What we want to see is a long sustained push. Now, this can be seen in every time frame. And in this example, we are basically talking about level counts from your higher time frames, like your daily time frame. But this cycle, or this pattern, can be seen in your daily time frame down to your M1 time frame, right? So this can be seen in the daily. This can also be seen in your M15 or H1 time frame, right? So when we identify level 1 drop, what we'll see is we'll see a pullback, right? Usually these pullbacks, if you use the fib tool, if you basically annotate, or rather plot it from the high of the level count to the low, these pullbacks usually move away from the 50, 61, 80 area. So this is another area to actually anticipate where you might get a peak formation into your next level. All right, so be sure to use the Fibonacci, right? We'll dive deep into that as we move over to the charts, right? So as you can see from this area, we have another peak formation. A peak formation can also come in as a V pattern, right? So you can get something like this if it's a, buy situation, or you can get an A pattern where you have something like this, right? And most of the times it will not always be like this. What will happen most of the time is at this peak formation region, you might actually get one of the peak formation we just spoke about, where you get something like this, or you get something like this, right? So it will not always be like this, right? And that pushes us into our second level of drop. Remember, this has to be a swing point. This has to be a long sustained run, right? So us being given level 2, we identify another pullback. As I said, an area where you can anticipate a peak formation being set is when you plot from this high of the beginning of your level 2 to the end of your level 2 using your fib. You would want to anticipate the market moving back into the 50 or 61.80 level, right? So from that area, that is when we get another push giving us level 3, and then another peak formation is then initiated, right? So before we go far, remember, trading is a game of numbers. We begin counting levels when a peak formation has been set. There are many other peaks that form, but what makes you a winner in the long run is mastering a few setups and becoming a master at it. Right, so there's a lot of peak formations that can, present rather in the market daily. All right, so you cannot trade everything that presents on the market. All right, you need to know your setups. You need to know what works for you, and your setups. Remember, every setup has rules. Right, every setup has rules. So if you do not really have rules for your setups, you will find yourself all over the market, and usually that leads to making a lot of mistakes and eventually blowing an account, right? So being skilled is good in trading, but what makes you a winner is probability, right? How often are you right? So even if you are wrong, your winners should be able to cover your losses at all times, right? So if you find yourself trading each and every peak formation that presents in the market, you will not be able to actually gauge your winners and losses in the right way. You will not be able to negate your losses the right way. So I've been doing this for years, and the only types of peak formations that I trade are M's and W's, right? So that doesn't mean other peak formations don't work, but whatever you choose to trade, you need to make sure that you put a good amount of hours into back testing and formulating rules around these setups or other peak formations that you can look out for. Right, so you simply cannot trade every strategy or peak or setup that forms in the market. The secret is being selective, right? You really need to be selective, right? And if you did not know, money is not made by, trading in the market. Money is actually made by being able to wait for your setup. There will be days where your setups will not present. There will be weeks where your setups will not present. But what usually leads to a lot of people making mistakes or blowing accounts is the urgency of making money, right? People have bills to pay, and they are not able to wait for these setups. They are not able to follow their rules anymore because of the urgency to make money. But if you want to, survive and actually make it in the long run in trading, you need to teach yourself how to be patient, right? Because if your setup does not present, you cannot force a trade because you are now trading something that you do not have rules over, right? And that type of trading will not take you very far. Right, so I've got an example right here, and this is BTC USD, right? I always get questions whether, BTMM only works on currencies and the answer will remain the same, right? BTMM works on everything tradable. Anything with a candle, you will be able to identify the cycle. So as you can see in this example, this is the daily time frame, and what we can identify is we've got an information, right? This being the daily time frame, this will take a while to play out. As you can see, this took a couple of months to play out for that peak formation to be set. But as you can see, the type of peak formation that we had is the type of peak formation where second leg is higher. So that was a clear hit of stops. And what we can identify is a move to the downside, right? A clear move to the downside, as you can see. So this is regarded as one level of drop. Essentially, this being the daily time frame, this is 1 month of drop. So as you can see, after this 1 month of drop happened, we had a pullback. And as I said, as we jump over to the charts, I'll be able to show you this definitely happened around the 50, 61, 80. And as you can see, we had another peak being set at that area, leading us into the second month of drop being our level 2. All right, this is second month, and the market continued dropping, giving us the second level of drop. Right, so just by looking at this, what you can see is if you plot from this low to the high, where this peak formation was set is definitely the midpoint, right? 50, 61, 80. That is where we had that setup, right? So when I talk about being able to wait for these moves to play out, right, you should remove the mindset that you need to find a setup every day you get on your charts, right? That's what usually leads a lot of people into losing their accounts, or rather having unnecessary losses. As you can see, when this second leg, or rather second level of drop was initiated this month, nothing really happened, right? The market just traded within the same range, right? As you can see, the open for this month was around about this area. That is where this was actually in December, right? This was in December, and the open was here. And as you can see where the market closed, it was around about the same area. So nothing really happened, right? Now, this is where you need to be able to sit on your hands, right? This is where you need to be able to sit on your hands. You can imagine the impatient traders, the amount of, accounts that were blown at that area, right? So the setup that we had was here, right? Which only happened the second month. As you can see, we had this first leg, right? And then the second leg, right, being higher than the first leg. And as you can see, that is that is where a peak formation was initiated, then giving us the third level of drop. And as you can see, the market has given us another peak formation, and market is currently trading away from that peak. So this is very simple. This is something that can be identified in your daily time frame, right? So one thing you need to know about charts is every month, right? In this case, we're talking about the daily time frame, right? Every month we have a high, and every month we have a low. So every chart we have a high and low. And remember, our objective is to trade away from peaks. Our objective is to trade away from the high or low in line with the cycle, right? That's one thing that you need to understand. A complete cycle, which is our 3-level count in a month, is seen as one level of drop, right? So that is a complete cycle, meaning one level of drop is actually a complete cycle, because as we move down to the shorter time frame, in this case being your H4, one level in the daily time frame is actually a complete 3-level cycle in your H4 time frame. Right. So to trap traders, what market makers do every month open and close is where traps are initiated to induce traders. All right. So beginning of every month, every trader is hyped up, right? And this is where a lot of traders make mistakes. And this is where a lot of volume is also placed into the market to trap traders. This applies for, even your intra week. Every week there's a trap. Each end of the week there's a trap. Every day there's a trap. End of the day there's a trap initiated, right? And as an intra-week or intraday trader, understanding the daily time frame count prepares you for what is to come. So you understanding what level you are in the daily will definitely help you make better decisions when you're looking for your setups in your weekly, in your H4 time frame, and of course your H1 time frame down to your M15 time frame, right? A level in the daily time frame can overlap into the next month. So always read the charts with clarity. So what I basically mean by that is what we have right here. As you can see on the last level of drop being our level 3, this was the high for that month, right? And the market pushed down. We can identify a push into a slight consolidation, and then we had another push and the month ended. All right, so for that month ended, jumping over, this was now in January. This was in January this year, 2026, right? So moving over into February, as you can see, the market just continued flowing to the downside. So that is what I mean by a level can overlap into the next month. A level can overlap into the next week. A level can also overlap into the next day, right? So a level of drop or rise in the daily time frame is a complete 3-level H4 cycle. Right, let me take you guys to the charts and show you exactly what I mean. All right, guys, let us jump into the charts. So this is basically what I meant as we were talking about the overlapping of levels into the next month should not confuse you into thinking that that is another level. Right, so in this case, this being our last level push, I mean, this is more recent. So this being our last level push, we're going to look to see how this played out in your H4 time frame. So let us move over to the H4 time frame. So what we can see in the H4 time frame is very simple. Looking at this is what we can identify from the H4 time frame. From the H4 time frame, as you can see, we had this peak formation, right? M formation set, with the second leg being higher than the first leg, right? If we look to the left to see if there was any zone right at that level, nothing really clear for me, right? Nothing really clear for me, but what we had in sight was the 800 EMA, right? Market has a tendency of moving to the 800 EMA always when it's in sight. So that is a reason why we had all these weeks of consolidation, right? Market was making its way up to the 800 EMA. So when that peak formation was set, what we can identify is we just had a slight move, right? I wouldn't consider this as a long sustained move. The long sustained move is actually this move. But as you can see, this overlapped from this week into this week, right? So that was our level 1, right? That was level 1 in the H4 time frame, right? So level 1 in the H4 time frame, and as you can see in this case, talking about our fib, right? Let me just go back to the daily time frame to talk about what I was referring to when I say you can plot the high of the drop to the low, and you can anticipate the next level or the peak to be set around the 50 or 61.80, but I love the 50. And as you can see, that is where we had the peak formation set for us to go into the next level. Now, from that area, what we can see is if we plotted, because remember, all this movement right here is still part of level 1, right? So all this is still part of level 1. So the high that I would use in this case that initiated the level 2 would be this one, right? So I would take it from this area. So from that high to that low, as you can see, market made its push back just slightly above the 50 area. That is where we had the peak formation, which led us into level 2. All right, so looking at this on the H4, since we are still on the level counting, that is what we had, right? In this scenario, we did not have a full pullback into the area where we would be watching. In this case, that would be this high and that low, right? So as you can see, market did not make its way up. In this case, we would have taken our trade off these EMAs, right? Which is something I'm going to be talking about in our next video, right, on how you can identify such setups that do not fully pull back into the 50. Right, so from that area, as you can see, level 1 being set, we then had our level 2 drop, right, which was from this area, which essentially this would be our second week of drop, right? So from this area, this would be considered as 1 week of drop, although it took 1 to 2 weeks to play out, right? This being our second week of drop, what we can see within this second week of drop is we can identify a slight push, right? Another push, and then another push, giving us 3 levels. So it works the same, guys. One level in the daily time frame is actually 3 levels in your H4 time frame. This is what we can identify, and it goes down to the H4 as well. One level in the H4 time frame, meaning in this case, one level of drop or 1 week of drop in the H4 time frame is actually 3 levels in your H1 time frame. Right, so I hope I'm not confusing you guys, but I hope you can see it. As you can see from this peak formation that was set, let me just zoom in for you guys. From this peak formation that was set right here, we had this slight push, second push into a consolidation, and we had the last long sustained run. Right, so from that level, as you can see, that being our second level of drop in the H4 time frame, we then had the last level of drop, right, in the H4 time frame. So in this case, you can identify that push, a slight pullback, right? In this case, we do not really see a pullback clearly in the H4 time frame, but this comes in as 3 levels, as we understood what we're looking for from our higher time frame, in this case being our daily time frame, right? So the counting of levels shouldn't really confuse you, right? But you should be able to see it with clarity. The moment you start being confused with level counts, there's something wrong that you're definitely doing. And this will continuously play out all the time if you know what to look for. In this case, a quick example would be this, right? We've got a peak formation here, second leg being lower than the first leg, right? We can identify this was the low for that month, since this is the daily time frame. One level of drop, of rise into a consolidation. We have another level, another month of rise into a consolidation, and as you can see, we had the last level push giving us level 3, and that is how we had that reversal, right, pushing Bitcoin to the downside, right? So this can be seen in every time frame, right? We actually looked at a setup on USDCHF. I actually shared this in our Telegram channel. If you're not part of that, do find the link in the description below, right? That's the only way you can join our channel, through the link in the description below, right? So do check that out. So this is USDCHF, and this is in our M15 time frame, and what I basically wanted to see was a move above that area, right, or an attempt towards this high right here, right, for us to continue moving to the downside. So I'm gonna take you through that from the higher time frame and explain how I got to that conclusion. All right, so very simple. I'm not gonna take you very far from it. What we can identify is from this area, right? Remember, this is our daily, so this high of the month, we can identify level 1 push, right, a pullback, right? And if we use our fibs, as I just shown you guys, this pulled back to the 50 area, right? A pullback to that area. We also had another push down, right? A slight pullback, and then we had the last push to the downside. And as you can see, the market then turned the other direction, failing to break this low right here. So that is our second variation of our peak formations, right? And from that area, what we can identify is market played around. So for this month, nothing really happened, right? We didn't really get a long sustained run. What we identified though is the beginning of the next month, right? Remember what I said in our slides, that the beginning of the month and the end of the month, this is where trap moves are initiated, right? So most of the times what you're going to get is beginning of the month, you're going to get false move month beginning, meaning this will open and most traders will see this, going long, right? And before you know it, the market makers crash you. Right, so that's the same thing that happened right here. For most traders, what they would be doing here is they were definitely looking at this order block and looking to go lower. I mean, everything ticks the box, right? We are in a down phase. That is an order block, right? And you are probably waiting to see another long sustained run, right? That did, however, react, right? But just as the market was about to close for that month, right, and the new candle opened, what we can see is we then got a long sustained run, giving us level 1, going the other direction into a consolidation. We then see another long sustained run into a consolidation, and we identified another push, giving us level 3. Now, the variation we had right here was the first leg was actually higher than the second. Why? That is because the market went and filled these orders right at this area. Right, remember I spoke about the zones, right? I spoke about the zones. If you missed that, be sure to go back on the video and get a clear understanding of that. Right, so market pushed into that, and there was no reason for market to give us another push high, right? Because the orders were already filled at that area. Right, so looking at the setup that we traded this week was we had a peak formation in the daily. Right, we identified a drop, right? So here's our drop from the peak into a consolidation, and we identified another move down, right? So as you can see, market then made its way back up again after this move. Market then made its way back up, in this case, to this order block, right? To that order block right there. So let me just clear this up so that it is not too clogged for you guys. So that's it. It's just understanding the level counts and what is happening. So in this case, what I identified was we are moving away from an order block, right? We are within this month, right? So this for me is a level of drop. Although if you view it, you can identify 2 levels, right? We are within a level of drop, and I was anticipating another level of drop. So if we moved over to the H4 time frame, this is what I saw, right? Last week, what we had was a peak formation, and this peak formation was set just above the 800 EMA. In this case, the variation of the M formation is the second leg was higher than the first, so stops were definitely hit, essentially filling the orders right at this order block or supply zone. Right, and what we identified with clarity was a clean move to the downside, right, ending the week right at that area, right, and then giving us a pullback. If I take my fib from this high to the low, what we can see is price didn't really make it to the 50, but slightly below, and that is because we had the 50 EMA in sight, right? Remember, I did say I'm going to talk about the EMAs on our next video, but in this case, this peak formation was locked because we had a 1350 crossover, which confirms the lock of this peak and also confirms us being into level 1, right? So that is the reason why I took the trade. As you can see, when I sent this out, I wanted to see a move just above that area in our M15 time frame, and in this case, this is what happened, right? If we just go back a bit, right, price did attempt to go above that area, actually went above, although we can just identify wicks, but price did actually go above that area. Remember the opening of spreads as well, stops were definitely hit at that high of the day, So as the market ebbed and flowed, as you can see, we could identify a push down. Right, when market reached this area, what I identified was price, then moving back to these EMAs. And at that same area, I also identified an order block. Right, so I wanted to see a continuation of this. And as you can see, this is the reason why I had this markup right here. So the market had already done what I wanted it to do. Right, and market reached this order block that I was watching and these EMAs, and I wanted this to continue going down. And as you can see, this definitely continued moving down. So if you did not catch it from this area, right, if you caught it from there, you had over 75 pips. In this case, I was targeting this low, so around about 68 pips, right? And if you added on a trade, or rather took this trade, your stop would have been above, risking around about 8 pips, and your target would have been, I was just going to place it at 50 pips, which is okay for me, right? Risking 8 pips for 50 makes a lot of sense for me. Now for today, we also had a setup. We also had a very clean setup that we had, as we had an ID 50 right at this area, but it would have been easier for me to trade this because I understood my level counting from my daily time frame. I understood the level counting from the H4 time frame as well, which makes it easy for you to then look for setups in your shorter time frames, such as your M15 time frame. All right, guys, if you're new here, don't forget to hit that subscribe button, leave a like and leave a comment. Don't forget to check out our Telegram channel. Find the link in the description below.